Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. In today's presentation, let us discuss why rupee has got weaker or why it is trading above 86 levels in the NDF market. What is the outlook for rupee in coming days, and what is an ideal strategy for exporters and importers at this point of time. In last 24 to 48 hours, we have received numerous calls from our clients asking the same question whether rupee can move towards 90 or 95 levels. Our simple response to them was, when rupee gets weaker, a lot of people get more pessimistic about the trajectory of rupee. Instead of focusing on the level of rupee, what we suggest them that they should keep a track on global factors and plan their hedges well. Coming to the main question, whether rupee can touch 90 or 95 in couple of months, at CR Forex we do not foresee rupee at 90 or 95 level in next 6 months duration. So the first factor why rupees got weaker, the answer lies in the international factor. In the international factor, if you see in last 2 months, dollar index which was trading near 100 level now has moved up towards 109.50 kind of level. Basically dollar have got stronger, close to 9%, because of which all emerging market currencies have got weaker. The first 1.5 month rally in dollar index was because of Trump tariff. Market is expecting that Trump is going to impose a lot of tariff across the country, which will increase the inflationary pressure in the US, and because of which the Fed will not be able to cut the interest rate aggressively, resulting dollar index to move higher. Last week, Fed minutes of the meeting came. Fed minutes of the meeting has its own importance. When Fed comes and give its outlook, we are able to understand what they are doing in the market. But when their minutes of the meeting come, we will be able to understand what Fed is thinking. From the minutes of the meeting, it was clearly observed that they are saying that they can keep the interest rate at the current level, or they can reduce the interest rate at the slowest pace. They will only change their trajectory if inflation comes down drastically or there is an issue in the labor market. Domestically, FII have sold close to $14 billion worth of Indian equities and debt between October to Jan because of softer Indian economic data, weaker corporate earnings, and 10-year US yield was rising at a very fast pace, because of which money from all emerging markets have moved to US. Second reason was higher trade deficit. Now the question is, will the RBI will be able to defend the rupee? Overall, if we see, RBI has done a great job in managing the volatility of rupee. From 83 to 84, it took 13 months for rupee to get weaker by 1 rupee. And in last 2 months, rupee had moved from 84 to 86. The primary reason why RBI was not able to sell dollar aggressively as Indian banking system was facing a liquidity deficit from last couple of months. Now, when in the banking system liquidity deficit is there and RBI sells dollar at any point of time, what happens? Banks will give him rupee. Because of that, liquidity pressure will continue. So the answer is, RBI cannot change the trend of rupee strengthness or weakness. What they can do is that they can always manage the volatility. If they are not able to sell in the spot market, apart from that, they have many tools like intervening in the forward market, NDF market, or by verbal intervention, they can slow down the pace of depreciation. Now let us discuss what is the outlook of rupee. रूपी के अंदर में the trend can only reverse because of three factors. First indication of a trend reversal can happen if the dollar index goes down below 107.50 kind of a level. Now let us understand why dollar index can move below 107.50 kind of levels. The first reason why dollar index can change its trajectory is Trump's policy expectation. The entire world is expecting Trump to put tariff aggressively globally. But as he did last time in his election speech, he was more aggressive. But when he joined as a president, he became little lenient in putting that tariff. If any change in stance happened this time also, then we can see a reversal in the long dollar story. The second reason can be change in Fed stance. One of the biggest problem in the US economy today is their interest payment on their total debt, which is close to 20 to 25% of their entire year revenue. If the government pressurizes Fed to cut the interest rate because of higher interest payment, then dollar index rally can reverse completely. Apart from all the fundamental factors what we have discussed, if we see the charts tell us the story that technically rupee is trading in a extremely overbought zone. So 86.20 to 86.50 is going to act as a strong resistance for the pair, and 85.80 is going to act as a strong support for the pair. The first indication of trend reversal will only get initiated if rupee closes below 85.60 kind of levels. We think at the current point of time, the one of the most important thing is to focus on the exposure rather than chasing the view. So let us discuss strategy for exporters and importers. Let me start with strategy for thin margin exporters like agri exporter or chemical exporter. A lot of thin margin exporters are taking costing near 85-50 kind of level. For them, we will suggest them that they should maintain a hedge ratio close to 70 to 80%. To maintain a hedge ratio of 70 to 80%, they can participate between 86.10 to 86.15 kind of a level. For remaining open position, they should keep a strict stop loss of costing or 85.60, whichever is higher. Now let us discuss strategy for thick margin exporters like textile exporter or engineering exporters. Uh, from last couple of weeks, we have been suggesting them to wait with a stop loss. On our last video of 2024, we suggested them that they should keep a stop loss of 85.20 and hold. Now we are revising our stop loss level from 85.20 to 85.60 kind of level. If 85.60 is broken, then we will initiate selling for thick margin exporters. Now let us discuss strategy for importers. In the NDF market, rupee closed near 86.20 kind of a level, but there is a 80 to 85% probability that rupee can open near 86 kind of levels. Now those importers who are unhedged for next 15 to 30 days, they should hedge between 85.90 to 86.10 kind of a level for next 20 to 30 days import. Anyone having import payment after 30 days, they should wait for lower levels of 85.80. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.